What is up guys, my name is Ignas, welcome back to the channel. We are now in the last episode of 2021 and for today's analysis I have picked one of my most favorite names, Mastercard, ticker symbol MA. It didn't do much this year, the stock is now up 2.7% on the year to date. The highs for the year was at $401 and the 52-week low is at $306 per share. So now with 360 we are pretty much right there in the middle. We have the price to earnings for it now at 44.38, which is higher than other stocks that we are usually looking into, but in line with competitors such as PayPal. And differently than them, Mastercard is paying a dividend, which is now at an annual yield of 0.54%. So for today's analysis, we will first take a look into their third quarter earnings, then history of their financials. After that, we'll check what are the analysts' expectations for next year, then what Superinvestors are doing with the stock. We will also check into the technicals of the price chart, and lastly I'll share my own current position in Mastercard on eToro. I really appreciate you coming over for the analysis, so let's start. Mastercard provides transaction processing and other payment related products and services in the United States and internationally. It facilitates the processing of payment transactions, including authorization, clearing and settlement, as well as delivers related products and services. The company offers integrated products and services for account holders, merchants, financial institutions, businesses, governments, and other organizations, such as programs that enable issuers to provide consumers with credits to defer payments, payment products and solutions that allow its customers to access funds in deposit and other accounts, prepaid payment programs and management services, and commercial credit and debit payment products and solutions. It also provides value-added products and services comprising cyber and intelligence products, information and analytics services, consulting services, loyalty and reward programs, processing and open banking services, and issuer and acquire processing services. So for the third quarter, Mastercard revenue was at $5 billion, climbing 30% year over year, and beating analysts' expectations at $4.95 billion, 1% higher than predicted. Then on bottom line, they reported $2.37 per share, which also beat analysts' expectations at $2.19. Mastercard's CEO said that the performance was driven by healthy domestic spending and solid growth in cross-border spending, which has recently returned to pre-pandemic levels. So as traveling is ramping back up, so are the company's results. There is also expansion planned, where the CEO states that we continue to add our efforts in cryptocurrency services and open banking through the acquisition of CipherTrace and the planned acquisition of Aya. So growth is coming back, at least in the most recent quarter, but what if we take a look into the revenues of the last 5 years? Back in 2016, Mastercard was bringing in just over $10 billion for the trailing 12 months. Then in 2017 that was almost at $12 billion, 2018 $14.5 billion, and in 2019 $16 billion. But as the pandemic hit in the beginning of 2020, the revenue topped at $17 billion for the trailing 12 months. Then it did go a bit lower, and adding the fourth quarter of 2020, we were at $15.3 billion for the year. But with demand and traveling coming back up, we had the largest quarter in the last 5 years at almost $5 billion, and are coming closer to $18 billion on the trailing 12 months. Now let's switch to price to earnings. So back in 2016, the ratio was at 27.3, then in 1 year it went up to 32.16. In 2018 we had it at 44.39. As the price kept climbing in 2019, that was at 39.84. Then with earnings dropping, the PE jumped up to 50.4, and by the end of 2020 we saw a peak of 55.76. Currently, with the price being at just over $360 per share, we are looking at a price to earnings ratio of 44.5. So it appears that buying in right now wouldn't give us the stock for the cheapest in the last 5 years, as back in 2019 we could have bought in with a PE under 40, and in 2017 that was a price to earnings under 30. Now let's take a look into the shares outstanding outstanding. So back in 2016 that was at 1.1 billion. Then in 2017 it decreased to 1.068 billion. 2018 at 1.043 billion shares. 2019 1.019 billion. In 2020 it was just over 1 billion shares. And currently Mastercard is at 0.99 billion shares outstanding. So it seems that in the last 5 years they managed to buy back around 100 million shares, or around 10% of all the shares outstanding. Now let's take the history for the dividend yield. So back in 2017 it was at 0.74%, then in 2018 it decreased to 0.57%, 2019 that was at 0.35%, in 2020 it went up a bit to 0.54%, then as the price was surging closer to $400, the yield went lower to 0.44%, and currently in 2021 we now have a dividend yield of 0.49%. So both the stock price and the dividend payout has been consistently increasing, but the yield is behaving a bit differently. Starting with 2017, it has been decreasing to 2018 and to 2019, with the percentage bottoming out at 0.34%. But then as the payout increased in 2020, the yield went up to around 0.5%. And since then, in the last 2 years, we are seeing a move sideways with a slight decrease, where the yield is now at 0.5. So buying now is not getting us the best dividend yield of the last 5 years, but it's still better than we could have anticipated back in 2019. To further check on the yield, I made this table and graph in Google Sheets. So we have the dividend yield history for the last 5 years, and I took the average yield, which comes at 0.51%. Now in the graph we can find the yield line moving for each quarter, and also where it stands with the 5-year average. So if we bought in somewhere in 2019, that was a yield under the 5-year average, and it was similar for 2020 and 2021. For the best yield we needed to buy in before 2018, and we had these 2 moments where the yield was over the average, one in 2020 and now the second in 2021. And the table suggests that buying the stock now would give us a yield 6.18% over the 5-year average. If you would be interested in similar material for other dividend stocks, then do consider joining Patreon or memberships, where I could then update regularly and share. Now let's check into analysts' expectations. Where do they think the price for Mastercard should be next year? So we have 36 price targets of analysts on Yahoo Finance. They range from the lows of $360 to the highs of $494 per share. The average out of it is $431.57, and we currently have the share price at $360.99. So on average, analysts predict that next year the price should be increasing for 19.6%. We can also take another angle. Analysts estimate that next year the stock will bring $10.53 in earnings per share, which is way higher than $8.26 that we have now. If we assume that the price to earnings remains the same, then for next year we are looking into an increase for the share price at 27.5%, and that would bring the share price at around $460. So a $100 increase for every share owned. So far it's not bad, but let's check what Superinvestors are doing with this name. So we have around 15 portfolios who are holding Mastercard, 3 of them are buying more, 5 portfolios reported no activity, but there are 7 funds who are actually trimming on their positions. For example, Egerton Capital currently holds around 700,000 shares, and they have reduced in their position by around 14.6%, meaning that they sold out of around 120,000 shares, which at the current price of $361 makes a reduction on the position of around $44 million. But there is at least one contrarian investor from Poland Capital Management. They are now holding 7,642,000 shares and have recently added 24.11% on this position. So their current 5% exposure is now worth $2.7 billion US, and that recent addition of 24% is now worth $660 million. Even considering this decent addition, it seems that Superinvestors are net sellers, but now let's also check what the insiders are doing, and this one doesn't look promising at all. So in the last 6 months, insiders did 0 buys, which of course makes it a total of $0, but they did 41 transactions to sell, totaling at almost $1 billion worth of the stock. At the current price of $361 per share, this results in a selling pressure of 2,652,000 shares. As the share price has been moving sideways for the whole year, it is is a bit concerning to see such insider commitment to keep selling out. Now let us take a look into the price chart. We seem to have bottomed out on the first day of December at $306 per share. The relative strength index was at 34, and there was plenty of bearishness in the MACD. That was also the last day that I have made a long trade in MA, but after it quickly bounced back up, on December 7th the price went to around $340 over our second support price target. The relative strength index went up over 50, and we had a bullish crossover in the lines of the MACD. Then it was a bit choppy as the price kept bouncing over my price support, but the strength increased on the 21st, and on the 22nd the price went over the second support target. So I sold out of one long trade there, and with the price reaching the first support the next day, I sold out of the second long trade too. For the next 5 days the price is pretty much moving nowhere. We are now at the 200-day moving average. The relative strength index is just under 60, but the gap between the lines of the MACD is decreasing just a bit. I'm hoping that the weakness increases, the price drops back under my supports, and then I will add back into it again. Even though I did sell out of a few trades, I'm still holding Mastercard on the eToro trading portfolio, so there are now 3 long trades. One was at $361 per share, then I got it at $348, and another at an opening price of $352 per share. So there is now 2 positions in the green, and one pretty much at 0 or a loss of 1 cent. So overall we now have $300 invested at an average opening price of $353.60 per share. This means that we are up for 2.08%, making the value of this position at $306.23. Mastercard is one position that we are trading frequently, but there are other positions in the portfolio that we use too. If you would like to check what other stocks we got, the portfolio is public, you just need to follow the first link at the top of the description. Now let's do a small recap of what we learned. Quarter 3 earnings were great, both top and bottom lines increased year over year, and both beat analysts' expectations. In the last 5 years, revenues have been increasing consistently. There was a slowdown when the pandemic started, but we are currently even over the previous highs. Unfortunately, the price to earnings is now a bit expensive, as in the last 5 years we had plenty of opportunities to get it under 40. They are buying back quite a lot of shares, and in the last 5 years the number of shares outstanding decreased by 10%. Current dividend yield is now just above the 5-year average, so as of the last 5 years doesn't seem to be the best opportunity. Analysts' expectations are positive, and they predict that in 1 year the price should be increasing from 20 to around 30%. It seems that Superinvestors are currently net sellers, but the most concerning part is that insiders in the last 6 months have only been selling. This month we had a nice run in price, and it went over our supports, but with the recent slowdown I am now waiting for a pullback to get back in, and I'm buying when the price reaches our support, which is now set at around $336 per share. So that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. What do you think? Are you buying or selling Mastercard right now? Share your stance in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did an analysis on a semiconductor company, so if you would be interested in that, then click on a video that is currently on the screen. And that was it from my side. Have a happy new year, and I will be seeing y'all in the next one.